Good evening and welcome to Money Control. You're watching yet another edition of our special ongoing live post-budget coverage. You're watching Budget 2023, the Deal Street Verdict, and I'm Ashwin Mohan. Over the course of the next half an hour, I'm going to be chatting with a top panel of deal makers on the impact of Budget 2023 on mergers and acquisitions, the world of private equity, equity capital market deals, and the overall investment climate. Joining us on the show today are Pramod Kumar, the MD and Head of Investment Banking at Barclays Bank India, and Ashwath Rau, Senior Partner at law firm AZB Partners. Gentlemen, thank you so much for taking out time and joining me on the show today. It's a lawyer-banker combo, and we hope to glean a lot from your experience practically when it comes to cracking big deals. Pramod, let's dive straight into the conversation and let's speak about the government's focus on infrastructure, right? If you look at the capital investment outlay, that was hiked by a sharp 33%, and that was hiked to 10 lakh crore rupees. Clearly, there's a huge focus from the government on infrastructure, roads, highways, ports, power. What kind of a cue do you think it gives to India Inc., the private sector? And also, what's the impact that you think this move will have on the appetite of both foreign as well as domestic investors? And many of them, mind you, may not have indulged in monetization, and many of these subsectors of infra have not yet been monetized. So what's your preliminary take on the big infra push, Pramod?
Look, I think it's consistent with what government's been doing over the past few years. There is clear recognition that infrastructure really drives deeper economic growth, right? So this has been a big push on infrastructure this year by the government. And as we've seen, investment in ports, airports, renewables, and now green hydrogen, ammonia, that is a big thrust. This will definitely give it a very strong push, and it will have a multiplier effect on the economic growth. And as far as I see it from the external world, India is seen as a very attractive market that needs further investment in infrastructure. We've seen continued investment from the pension funds, the sovereign wealth fund.
Right.
So this will definitely be a very positive move to support more and more investments in the sector.
Right. Ashwath, moving on to you, do you share Pramod's optimism? Do you think that there are certain untapped sectors of infra not yet monetized that perhaps people may now look at following this move?
Absolutely. I think the only thing I would add to what Pramod said is one of the statements made by the finance minister in her budget speech, which is a long-awaited request from multiple investors and industry, which is their review of the harmonized infra master list to basically hopefully see it include infrastructure services, infrastructure holding companies, and as part of the other push that came through in the budget, activities like green fuel, which is hydrogen and ammonia,
right,
and several other infra activities which currently are not part of the master list. So one hopes that that review will result in those changes, because that list is important, because a lot of benefits for investing into infra, whether from an FDI standpoint or from an FPCI perspective or even tax, are linked to finding a place on that list. So if that review happens and include what needs to be included, I think this budget is actually going to add a fillip to infrastructural investment, which in any event, I think has been going well. It's probably going to, give it a further push.
Right. So clearly both our panelists are optimistic, and let's look forward to perhaps some big ticket infrastructure deals going ahead in the rest of the calendar year. Now let's shift our focus to another hot sector, and this is the entire sector of green or renewable energy, right? That's also a big push that we saw from the FM in the budget. The budget speech spoke about many programs for green fuel, green mobility, green farming, green buildings, green equipment, you name it. So the budget clearly wants to position India as a leader, technological leader, as well as a market leader in this sunshine sector. In fact, they've also come out with an ambitious annual production target of 5 MMT by 2030, right? Now let's shift focus to our panelists. Pramod, Do you think this is an attractive enough invitation for some of the top global private equity funds many of them, as you're aware, they have their special impact funds, right, or impact arms, and all of them focus on these ESG targets. We have seen some of them fructify in the past. We have seen the likes of TPG look at, Tata Motors. There are some other, firms also in the EV segment that are looking at raising funds. What's the fillip that the entire, the green energy area will get because of this narrative that was spoken about by the finance minister in the budget?
No, again, I would say this is very consistent with what the government has been doing in this direction. Our PM has always been a very strong supporter, even at the global forums, to support, green investment. And India has taken a really lead. And, there's a huge amount of investment that needs to go in this sector, given our ambitious targets. Now, as far as, I think FM's kind of talked about a very wide spectrum of green, including green building, green fuel, etc. But I think green fuel itself is such a very large opportunity, and that has seen some investment. It is just going to be a further extension. And, as Ashwath mentioned, maybe just citing sort of green hydrogen, green ammonia, generation of green power is going to be a biggest component of cost of delivering green ammonia, green hydrogen. So, I think India, with its huge solar resource opportunity, certainly is very well placed to be able to make that transition. And government's push to encourage investment in that, providing, support through, either viability gap funding or just enabling, framework, will certainly lead to more investor coming into this sector. And I do see, as you rightly pointed out, Ashwin, there are private equity funds, there are global funds that are increasingly wanting to deploy funds into countries like India into impact. There are sovereign wealth funds, pension funds that are also keen to deploy capital in this. And actually, there's enough entrepreneurial spirit and plans here. And I think if this capital flows in, we can certainly see our targets being met.
Right. We've got two sectors covered. We've got infrastructure covered. We've got the entire green energy, green fuel segment covered. The next question ideally should be posed to the lawyer. So I'm going to pose it to you, Ashwath. And this is where there's an important step that has been taken by the government. And this has been taken to reduce friction, reduce litigation, between government and investors. And this is an important aspect in terms of settling contractual disputes involving the government and government undertakings. And this is specifically in cases wherein there's an arbitral award that is under challenge in a court. A voluntary settlement scheme with standardized terms is proposed to be introduced. Ashwath, what could be or what should be the contours of such a settlement scheme so that it becomes a success? Because at the end of the day, these are the kind of moves wherein the government is trying to reduce friction and become more friendlier to the average global investor.
So firstly, this has been a credibility issue, which is after you have an arbitral award, a challenge being brought in basically brings in more protracted litigation. And it's been, I think, an uncertainty and a dampener for investment, whether you look at domestic investors or particularly when you look at foreign investors. So this is a welcome move, a very welcome move. I think the contours, Ashwin, and the credit for this goes to the head of our disputes practice, would I think be threefold from an AZB perspective. One, basically ensuring that there is flexibility given under the scheme to allow, deciding the ideal course of action for a settlement basis the facts of the case. Because the concern always is, let's make it as rigid as possible so questions can't be asked. But then the problem in the context of disputes is that may well come in the way of even achieving a settlement. So I think flexibility in determining what the settlement could be being given to the deciding authority on the government side is critical. Fast decision making, is also important with a framework that allows submissions to be made by the counterparty to the dispute in relation to what they believe would be, a fair settlement, and that can be taken into account while settling under the scheme. And I think lastly, this is a technical point, but an important one, which is effectively applying the conciliation chapter of our Indian Arbitration Act to this particular process. So those would be three suggestions.
Sure. So, hopefully the policymakers are listening to what Ashwath is saying right now, because these are important details. And as I always say, the devil lies in the fine print. In fact, there's another aspect where they've tried to, in fact, become friendlier and provide ease of doing business. Over 39,000 compliances have been reduced, and 3,400 legal provisions have been decriminalized in the budget speech. And that's also something towards ease of doing business that formed part of the FM speech. Pramod, coming back to you, there was no specific mention of the disinvestment roadmap as far as the budget speech was concerned, and no specific mention of the progress of several ongoing government transactions that are at various stages, right? But according to budget documents, the FY24 disinvestment target, that's been pegged at 51,000 crore rupees. We're all aware of what happened in the ongoing fiscal. The government managed to mop up only 51,000 crore rupees. They've missed the target in the past few years as well. Of course, a major chunk of that 31,000 crore rupees came from the landmark LIC IPO. So, Pramod, my question to you is, with the elections taking center stage next year, do you expect FY24 to be a dampener on the disinvestment deals front?
Look, Ashwin, I throughout the FM speech, and if I really look at the overall budget, I think I find this budget to be very realistic and to some extent conservative as well, which is heartening to see, to be honest. Right. So given the global macro environment in which we are sort of operating, I think it's realistic not to have very ambitious disinvestment target. Now, one could say that, there is sort of election coming in next year. You would not do any radical sort of thing, which may be unpopular. But, if you look back, most of the government's disinvestments have really been done through capital market sort of transactions, right? On the stock market, not really too much of strategic sales so far. While there have been, I think announcements made around, except maybe Air India, which of course I think was a big strategic sale in recent time and very successful one. But relying too much on current environment on exits on stock market, I think would be very ambitious. So I think government's been very, very realistic on this front. And I think it's better to sort of out-deliver on this rather than actually having another year where we're not meeting targets. And actually also just enhancing credibility with everyone to put out realistic targets rather than very ambitious, which in the past people have been skeptic about.
Fair point, Pramod. Ashwath, this is something of a bouncer that was discovered in the fine print of the budget, right? And this is something that many in the M&A tax community believe could play spoilsport when it comes to PE/VC deals and for startups when it comes to raising capital. So here's what has happened. And, let me quote. It's a key change in Section 56 of the Income Tax Law. And let me tell you what the provision says. Now, the provision says that when a privately held company issues shares at a particular price that is greater than the fair market value, tax is charged to the amount received in excess of the fair market value. Now, what the government has done in the budget is that they have revised the provision and they have extended the ambit of this section to also include non-resident investors. That wasn't the case earlier. Earlier, the section was applicable only for consideration of issue of shares received by a company from a resident, not a non-resident. Ashwath, help us understand what could be the impact of this on the M&A environment when it comes to private equity and VC. A lot of your folks, a lot of your peers in the big four are a worried lot because they believe it will impact deal structuring.
Not just the advisors, Ashwin. I think, people who are going to be really worried are businesses looking to raise capital. And that would be startups as well, who I think are having a difficult enough time, without this change.
Funding window.
Earlier, the law basically said, look, if there's a difference between the value at which a company issues shares and the fair market value of those shares, the premium, the delta between the two, would then be taxed as income in the hands of the issuer company. So this was basically done, understandably, I think, for good reason to avoid, money laundering, round tripping, and a huge number of other issues, which basically came out of artificial valuations. But what it does is inadvertently hit genuine transactions where there is no artificial valuation. One would say, what's the problem? If it's going to be above fair market value, why would anybody do it at above fair market value? Therefore, it is suspect, and therefore you should have this rule. But the answer to that really is how fair market value is determined in accordance with the Income Tax Act, and it's prescriptive, and it basically sets out a methodology which is conservative. Now, the short point here is, why would we grudge the ability of our companies to basically, raise capital at higher valuations based on other internationally accepted valuations, which may throw up a higher price? And the working assumption here, obviously, is nobody's really going to issue shares to a third party at anything less than fair market value. Earlier, there were two exemptions given. One was domestic pools of capital, basically registered as an AIF, which covered at least domestic private capital, if you will. And then non-residents were basically, as a larger category, exempted. Now, this budget basically brings non-residents back into the fold, or rather brings them into the fold of this particular provision. And I think this is going to be an issue. And the rationale for why it's been done is something one will have to figure out.
Right.
But it's certainly going to have an impact, I think, negatively on capital raising at a time where you really don't want it, particularly in the startup ecosystem.
Absolutely. You hit the nail on the head, Ashwath. A very, very important point raised by a panelist over there, and we're pretty sure that perhaps representations will be made in due course regarding this particular change to the budget provisions. Now, we have spoken about a whole host of announcements and proposals that were made in the budget, but the budget was also silent on several proposals that could impact Deal Street. If one way to look at the entire long-term capital gains aspect, the short-term capital gains aspect, the taxation bit over there, that regime has been left, it's been not tinkered with. And that also came as a big relief for the markets, because in the run-up to the budget, there's always this speculation that that regime could be tinkered with. That was not tinkered with. That was taken as a positive by the markets. So status quo on that, at least from the FM. But I must shift focus now back to Pramod. Pramod, overseas direct listing, right? That was a proposal that was made by the finance minister sometime back in an earlier budget. Last year's budget was silent on it. This year's budget is silent on it. There still seem to be pockets in the industry who believe that certain sectors and certain kind of companies or certain kinds of subsidiaries are perhaps in a position to be best valued overseas. Having said that, all due respect to the depth of the Indian markets have displayed that over the course of the last 2 years. They've embraced new age companies, but the government was silent on that bit. And also, no FDI cap liberalization. Now, one might say that there's been a move on insurance, 49 to 74. What more can be done? But what's your take on the government's silence on these two aspects, Pramod?
Look, on the first one, I think we've gone back and forth several times on this proposal, right? But we haven't really seen a serious follow-through to implement that, right? I think if we go back several years ago, we talked about simultaneous listing, but there were certain provisions that never were harmonized to ensure that. And since then, I think we haven't really seen a real tangible action on it. My view is that, we should really leave the issuers and investors to decide where do they get best valuation and freedom to determine that, right? So therefore, I think not doing anything on this is certainly something that's maybe disappointing. But is that something that we're losing a big amount of money today or denying companies to be able to raise capital? Not necessarily, but it is something that should be encouraged, in my view.
Right. In fact, another aspect, both of you gentlemen, is on which the government was silent on in this budget was, last year, if you recollect, they wanted to set up a expert committee to clear the regulatory climate and the tax environment for PE and VC investors. Later in the year, the government announced that that committee would be headed by former SEBI top boss M. Damodaran. I believe a proposal was submitted by this panel, but at least in the budget, this year's budget at least, there's been no movement on the recommendations of that panel. Let's wait and watch to see whether there will be some movement on that front in the days ahead, especially because of the negative news on PE and VC that came in because of the the widening of the scope of the section that Ashwath and I spoke about earlier in the show. Ashwath, nothing for equity capital market deals, IPOs, QIPs, rights issues. One would imagine that perhaps this budget would sort of provide a push over there as well. The last 2 years have seen a lot of frenetic capital raising. Of course, the second half of last year saw a dip in that. But your take on the equity capital market deal scenario? I know you're more of an M&A person, but broadly, what would your take be?
No, I think, Ashwin, in all fairness, firstly, one should be cognizant of the fact that the budget is not the only instrument, with which to bring changes that are required to facilitate investment, whether it's M&A or, capital raising in our equity capital markets. The miss, if you will, is some of the, say, taxation-related recommendations that the Damodaran Committee might have made have not been given a green light in this budget. So to that extent, people who hoped for it will be disappointed. But as far as your point in relation to the equity capital markets are concerned, and I would defer to Pramod, my view on this one is, if you really look at what the capital markets regulator has been doing over the last few years, including making key changes even during the period that we dealt with COVID and its challenges, and thereafter, one example that comes to mind is they basically reduced lock-in requirements applicable to the general public as well as to promoters in the event of a capital raise. I think those changes have been happening, on a timely basis. So this for me is not one of the, big misses in the budget. I think those changes will continue to be made by government and regulator where required.
Right. There are several other proposals that were also made in the budget. There's one very interesting one, though quite a broad-based one, wherein the finance minister said that financial sector regulators will be requested to carry out a comprehensive review of existing regulations to simplify, ease, and reduce the cost of compliance. Of course, we'll have to wait for certain more, some more fine print on that front, and maybe perhaps more directions from the government, but definitely a step in the right direction. Gentlemen, we'll have to wrap up very soon, so it's time now for closing comments. Pramod, why don't you go first? In the backdrop of whatever we have discussed, whatever you heard the FM say in the budget, your top M&A, private equity, ECM deal trend for the rest of the year.
Look, I think it's a pretty growth-oriented budget. On one side, it's supporting investment. It's creating a better environment for doing business in India. It is also actually giving more hands in the money in the hands of people. So hopefully that triggers increased amount of consumption. For both M&A and private equity deals to sort of, see a strong activity, it's really, what do you see as sort of, how do you see revenue outlook? How do you see margin outlook? So all of that, in my view, this budget has really been a good facilitator. Obviously it can't change the overall macro environment, but I think it's certainly seen as a step in the right direction. So I would think it certainly is very helpful for overall deal activity, for private equity investors to deploy more capital, for infrastructure funds, the impact funds, to put more capital into the country. So very positive on that front. All right,
gung ho, very optimistic Pramod over there. Ashwath, final word with you. Any key deal trend that you would like to highlight? I would like you to stick your neck out over there.
Specifically in the context of deals in 2023, I think the budget probably gives a fillip, if you will, to investment, both foreign and domestic, in the infra space, particularly, I think, in renewables. And you already saw 2022, which saw, I think, a lot of large ticket deal activity in the infra space, specifically in the renewable space. And, we'll hopefully see even more of that in 2023.
Right. Optimistic note struck by both our panelists, Pramod Kumar and Ashwath Rau. Gentlemen, always a pleasure chatting up with the two of you. Thank you so much for taking out time and speaking on the Moneycontrol budget coverage from a deal perspective. Thank you so much once again. Well, you heard the two gentlemen over there, top deal makers. That's their perspective. with that, it's a wrap on this edition of Moneycontrol's ongoing budget coverage. This is Ashwin Mohan signing off. Stay tuned for more news, views, and updates.